If you've been around the block a couple times like me, you almost for certain know that the price of everything tends to rise all the time. You may not hear about it as much in the media compared to when an asset crashes, but I remember when gas was under $1 a gallon and bread was less than 50 cents, and when rents were $250 a month. Although we wish these prices would come back, we know deep down that's not going to happen anytime soon. And the wages never seem to keep up with the rising costs of necessities. A way to fight against these higher prices are to buy assets to help preserve and grow your net worth. We will examine a few ideas while taking a longer term view to potentially protect you and your family against the relentless rise in prices of necessities. The price of gas today is on average $3.16 today in the US, but and was last below $1 in 1990. And you can also see from this chart the never-ending, relentless trend of rising gas prices with a few down years mixed in there away. So a way to protect yourself against rising fuel costs is to buy oil stocks. This is a financial jargon is called a hedge. If you own some oil stocks when the price at the pump goes up, chances are though your oil stocks that you're holding will also increase in value. So your increase in paying for the gas is offset by your gain in the stocks. It works in reverse too, however. So if gas prices do go down, chances are your oil stocks will go down as well. So here's a long-term chart of ExxonMobil. You can see kind of that relentless increase in the price of ExxonMobil sort of offsetting this relentless increase in the gas price. So it's a pretty effective hedge owning oil stocks as a as a hedge against rising gas prices. So the price of bread is the top chart, and you can see in the 80s down here the price of bread was below 50 cents, and right now we're at around $1.84. So you can also see that just sort of relentless climb up with a few kind of downward movements in the chart along the way. So the rise in to hedge against rising food prices can be a little bit more tricky, but you can also just use gold to act as a hedge. And most investors say gold is a hedge against rising prices. So you can see gold kind of topped out here after a big run to of $850 per ounce after we went off the gold standard in 1971. That top was in 1980, and right now gold is trading at around $3,800 per ounce. So pretty effective hedge against rising prices in general historically. So here's some more long-term charts of stocks and home prices, other assets to combat inflation. The top one is the Dow Jones Industrial Average over 100 years, but in the early 80s, it was trading below 1,000 points, and it's currently at 46,000 points. So it's increased in value a lot as well since the 80s. So certainly owning an index fund would have historically protected you against these nasty rising prices. Median houses in the early 80s were around $70,000 and now they're over 400,000. So buying a house is obviously a bit of a tough one. It's very illiquid and you really need to borrow money to buy a home. Oil stocks, gold, or an index fund are much more liquid. In our case, that term liquid just means a lot easier to buy and sell, and you can buy and sell in very small increments. So if you're worried about being a victim of higher prices, consider buying some assets like gold or oil stocks to help offset that relentless march higher in the cost of living. That's it for now, guys. Thanks for watching, and we'll see you in the next one.